Let's analyze the one important piece for the market, and that's been earnings. In fact, Kaynes Technology came out with its earnings. And let's try and understand what the order book, what the Capex, and of course the earnings fine print is. Let me welcome on board Ramesh Kannan, the MD, and we have Jairam Paravastu Sampath, the CFO, joining in on the show right now. Gentlemen, great to have you both on the show. Ramesh, if I could start off the conversation with you, because we are seeing a pretty strong overall growth in your revenues. Share with us which markets and verticals are driving this kind of growth.
We are growing on the industrial side and the automotive side. Automotive, more and more electronics is coming in. EV is adding to this, and we are in a good position placed with our customers. We have got good RFQs. Even railways, last 2 years was not much high, but this year we should be able to do a big number in the railway sector too. So overall, our growth comes from these three sectors. Medicals, we are having a lot of RFQ. It may not take place this year. It will take place only next year.
Right. Jairam, if I could get you in the conversation, because you had guided for a 1,700 crore rupee top line for FY24. Given the bullish sounding Ramesh here, you think that remains intact, or is there a chance that you could even better that?
See, I think it's better to deliver now that we have kind of communicated to the market that we are generally in a good business model, and also the market is also doing well. So I think we'll leave the job of projections to the experts. We will do our work, and I think we maintain that. But however, I can tell you that we will have better leverage, operating leverage. So you could see more improvements in the percentages also for both EBITDA and PAT. So, and like you said, toward the end of the year, we will again probably look back to you and inform you of the progress. So let's see how it pans out till then. But definitely, whatever we had projected last time, already the orders are in for that amount already. We have a few more quarters of orders for this year to go. So let's see where it takes us. So it's a positive journey.
Perhaps not being a little definitive when it comes to that number. But Mr. Kannan, your order book, that stands at about 2,600 odd crores. What is going to be the execution time frame for the orders at hand? And can you walk us through what are some of the other big orders in your pipeline?
See, the order book, what you're talking about is an 18 months order book to complete it. However, we are having a continuously inflow of orders on a uniform basis at 150 crores. Yeah, and it is slowly going up. So I feel for the next year, we will be much better positioned. I don't want to give a guidance figure today, but my feeling is it is going to be much, much better than this. And we will even grow more percentage by this. Next 4 to 5 years, it is all manufacturing in India. So if we can gear up ourselves, we are there.
Okay, you sound very optimistic on the order book front. Now, Mr. Sampath, close to 20% of your revenue is from exports. Will this share of 20% grow, and to how much? And will your growth be led by domestic exports? Or domestic or exports rather? What is the outlook in terms of the mix?
Yeah, so for the FY24, still domestic will retain its charm, and the growth numbers will be higher in domestic. So export as a percentage will probably remain stable at around 20%. And so even to remain at 20%, it needs to grow at whatever the 60-70% that we are having. But as we go forward, we have a lot of inquiries and RFQs which are almost finalized. So towards the end of FY24 and FY25, you can see an increase in exports too. And so these are two different types of demands, just to inform you. The domestic demand is essentially import substitution, and export demand is which is coming from other bases like China and Malaysia, etc. So we are having quite a good, strong, say, tailwinds in both the sectors. And it is coming across sectors, it's not just one industry vertical that is happening. So you could look forward to a percentage growth in as a composition in exports in the FY25. And in terms of rate of growth, I think that this year both will be head to head.
Ramesh, you received two PLIs. One is telecom and the other one is air conditioning and white goods. Wanted to understand what could be the benefit that could come in this fiscal itself, FY24.
See, this physical, we will do around 25 crores of benefit, but the real benefit will come in the next year because our products are just getting finalized with our customers and we are in the last leg. So maybe from the next quarter onwards, small billing will happen and going forward, it will increase in the last 2 quarters.
Right. And Jairam, your margins, they also have seen an improvement in this quarter. I'm guessing it was also partly because of the change in product mix. How do you think the product mix is likely to pan out, and what is then a sustainable margin level for the fiscal?
Yeah, so just looking at, since I have a little more information about this than what we have published. See, essentially our order book is quite balanced. It's not changed much from in terms of composition from what it was 1 quarter ago. But in terms of new RFQs, we see that new RFQs are in all the areas. They are in EV area, they are in industrial area, they are in IT area, they are in medical area, and also railways. So I would expect that both PAT and the EBITDA margins will be higher than whatever we have posted so far. They will be, just to caution, there will be obviously quarterly outlooks will be a little different because in our industry, the first quarter, second, third, and fourth follow this 1, 2, 3, 4 kind of a proportion. So, but in terms of quarter to quarter increases, you can see strong increases compared to the same quarter last year. So, we expect, I think the both PAT and EBITDA in terms of percentages will definitely strengthen based on whatever order inflows and RFQs that we are seeing now.
As I said last time, we are working on a very large RFQ. This is more or less in the last leg of the finalization.
Okay, fair enough. So, Mr. Kannan, given that the top 10 customers contribute close to 60% of your total revenues, any new customer additions to reduce that client concentration? And in which segment are you seeing most of the new customer additions coming in, if so?
I am having one industrial customer coming in. It's a multinational from Europe side. I'm also having a US customer also coming in. However, these large orders can come down to 50% of the top 10 can come down to 50%, not more than that, because every customer is growing.
Yeah.
If you see, domestic requirement also is increasing. So it will never be less than this.
Yeah, just to supplement this thought, we will have more and more increase in all the customers. So what we will end up having is that the top customer concentration, top 1 customer concentration will come down to single digit, and all others will also similarly. So in terms of diversification, will be good to have at least 10 pillars who are equally strong and equally growing.
Okay, fair enough. And so, Mr. Sampath, ODM segment is about 3% of your total revenue pie. And I understand that there are some plans to ramp up or increase the share of this segment, which is a high margin business over the next 3 years to 20%. A, can you tell us what margins you enjoy? And B, tell us whether or not you are looking to up the revenue contribution, and how will that affect your overall margin and revenue profile?
Yes. So if you notice, over the last 3 years, we've made significant investments into developing, accounting-wise, it's called the R&D expenditure. And we have worked on developing ODM profile for several products. We have more than 11 different streams of products wherein we are expecting the revenues to kick in over next 2 to 3 years. In the same segment, we also have IoT solutions, which we've been talking about for last 6 months or so. What we have talked about is still incubating, and FY25 onwards, you can see some significant takeoff in these segments. So these these 2 segments, both IoT solutions and ODM, they are roughly around 9 to 10% currently in our total sales portfolio. So they are likely to go up to at least in next 3 years. I can expect that they can go to about 20%. Eventually, we like these to be about 25-30% of our total portfolio. So, but that is a working process right now. It's a strong segment. We are interested. We are having opportunities, and we are also investing into resources and getting the R&D engineers into the company. And so you will see some good news probably by the end of this year, wherein we will talk about new ODM clients too.
And give us a sense then, going down the line, Mr. Kannan, there's a 260 crore capex lined out for FY24. What is the update on that capex and the expected capacity addition? Are you looking to increase the capex, considering that you were very bullish on your order outlook?
See, we have already spent 40 crores. In the next coming quarter, we will be spending around 100 crores, and balance we will be completing this year. However, the coming year, we are relooking at our whole budget and capex, everything. We will come back to you all at the appropriate time for that.
There are several new projects lined up, so obviously it will require larger.
It will require some capex, so we have just started working on it.
Your time, Mr. Kannan, as well as Mr. Sampath. Thank you for joining in and giving us a lot more clarity. PAT and EBITDA margin will be higher. The sufficient orders are currently in hand, says the management, to deliver their revenue target. 1,700 crores is what they are sticking to for FY24, and domestic growth will be much higher than the export contribution. That stock is on fire in trade today, 16% on last count.